Welcome guys, it's the Market Sniper. That's right, macro technical is our game. The group using HVF method that called the short in oil, the top in the bonds market, and the euro collapse for sub-parity run associated with the dollar index upside. What am I going to talk to you about today? I'm going to talk to you about platinum and palladium. They were short story, essentially both industrial precious metals, that means they cost a great deal, are exceedingly rare. I think platinum is rated as being 30 times more rare. If you put the world's gold in 2 Olympic swimming pools, you would only have 1/30th of that space that's associated with 2 Olympic swimming pools in filled with platinum. There was a period as we were pivoting from diesel back to hybrid with petrol, etc., for that interim period before we all drive iPhones that track us, lock us in our cars and deliver us to the police for bad social scores. Before that, we had the move to sort of a petrol hybrid away from diesel, and for catalytic conversion reasons, it seemed that palladium was preferential when you were on petrol engines over as we moved away from diesel. For that, there was a big move out. I'm not sure that encapsulates the full story. I'm not sure it's the full narrative. But anyway, the long and short is what I do trust is the macro technical. And for me, this has been the macro technical. And, you know, what many people forget about our single digit oil call was that it was actually a simultaneous gold long. So we do cross commodity analysis, you do relative value assessments, and this is very, very powerful. And what happened to the gold market is that it broke out despite the events of the pandemic that gave it short dips and then re-rallies into eventually running a $2,000 high and making macro HVFs on the pound and the euro. That's gold pound, gold euro, with an associated move that also went to some degree with silver. At the same time as oil was having the crisis of the pandemic events. Anyway, so this is a long short trade that in essence people can put on where the market has essentially shown us that there is indeed a potential extremity in relative valuation. And when you do relative valuation charting, that's when you find out about extremities in relative valuations. This has been a falling wedge that probably started as early back as April 03, but peaked. At the time it peaked, it would have taken you 5.5 palladium ounces, 5.5, 5 and then a half again, palladium ounces to secure a single platinum ounce. Platinum, remember, is precious metal that has traded more valuably through most of my life than gold, but is currently sub $1,000 as gold is 1,800. So just keep that in mind. What you're used to now has not always been the norm, and what might be the norm today may not always remain so. Anyway, this has been a protracted, lengthy loss of valuation for platinum against palladium particularly, and they are kind of to some degree, not exactly, substitutes. And this has gone on since the peak height of 09, key year that, as everyone remembers, probably bottom of the subprime crisis, and the subsequent fall from grace for platinum has been vast and huge. I think the eventual low, and I'm going to double check this in relative valuation, the low 0.03, 0.03, yeah. So the low over here was, you went from 5.5 palladium ounces to secure 1 platinum ounce, so 5.5, yeah, to get 1, to you needed, you could only secure 0.3 ounces. For 1 platinum, you could only secure 0.3 ounces of palladium, gone, and 0.7 gone, just a stipend. That is a massive loss in power. You were once 5 times 5 bigger. Now you are lower than a third. Now that is pivoting and changing as we speak. And we identified this some time ago, but this is a specific video on a long versus short. And the long versus short industrial precious metals trade is to be long platinum and short palladium. So we've been watching the palladium versus the dollar chart. So the benefit of this potential trade is, with all the risks to the downside in the global economy that are coming, this is a relative value assessment. In short, even with platinum going down quite strongly on a paper metals loss of value, you could in fact still make great wealth out of the trade and great alpha on account of palladium going down further. So these markets are also both very, very thin. And in actual fact, it's quite possible. It wouldn't take a great withdrawal. I've been watching, and I don't want to turn this into a fundamental clip, but I've been watching other precious metal analysts that look at the inventories. It would not take a great withdrawal of platinum out of the vaults to actually see a very close to 0 volt holding. So moderate withdrawal on platinum could actually see a shortage of platinum. Don't forget, for those who are new to this precious metal space, this is non-advisory. Please understand, we talk about trade ideas here on the Market Sniper using HVF method and looking at macro technical charts. But please also understand that the countries that provide platinum are Russia, that we've now got organized sanctions against, and South Africa are prominent players in that. BRICS potential nations. And whilst Australia and Canada and even America has small amounts, they are very, very low. So it is an even more non-Western provided material, if you count South Africa very much in the BRICS axis nowadays. So that's a monthly chart. I'm going to drop you in to the lower time frames just to check this out a little more closely. In fact, we'll reframe a little bit. Let's get it to weekly. So what you're actually seeing here is a breakout out of the falling wedge that has eventually transpired. It didn't immediately run, so it's sometimes long suppressed things. It's a bit like uranium, the great hated. Takes a while before things pick up. But you did have a spell here where you're making marginally higher highs for a little bit. Then you compressed. This was often to traditional technical analysts that would have been cited as a descending triangle structure, almost very similar to that. However, in the first moves, technically, in big trends, you often get continual top selling. The people that have been successful biasing to the short side of something continue to do so. And then you get that compression in a descending triangle. And often you can get a descending triangle when you get a first setup in a new turning trend. And this is my suspicion. So you actually get a break exactly the opposite way. We had something very similar in copper pre a major infrastructure announcement in 2016, I believe it was. Again, also, technically it looked at a low, but it had already been sold off so long, so hard, that actually it gets squeezed again and then broke violently in the other way. So sometimes waiting for that move in the opposite direction is very, very worthwhile. So this represents to me an end of the great squeeze. And I want to highlight that this squeeze's low actually occurred just over here. You're barely above 0.3. And it was April of 2020, March, back end of March. That was a pivotal year. So you have something that started and peaked in 2009, which was essentially the bottom of a subprime crisis, and saw substitution taking place in some degree or to some level. And you have in a period that runs 2009 to the bottom of a major, and there was a 20+ trillion bailout of banks, don't forget, that went to European and American banks by the Fed in 2020 after a repo failing of 2019 throughout the September-October period. You getting a pivoting out of that, an effective low at two cornerstone macroeconomic events as well. Now, I don't want to get unnecessarily conspiracy theorist orientated, but it does seem ironic that you had an absolute high at the bottoms of 09. 09 was the depth of the gloom. It was the time to buy the equities again, etc., etc. And you're getting post a major financialization event, which saw banks getting 20 trillion plus, then the announcement of all the stimulus and the lockdowns, etc. So I'm just wondering if now within that book ends of those two macro events, we are not seeing a reversion of something that is wholly suppressed. And once again, I stress, this doesn't mean you only win if platinum goes up. It just has to not go down in percentage terms to the same degree as Palladium. So let's have a little look at these guys, how they stand in terms of their current performances. We've been discussing this within the community, and I was highlighting that I expected Palladium to actually fall, and it looked quite bearish. And I have been, of the macro precious metals, I would say silver always has a higher beta, but bullish platinum, particularly recently. And I'm going to show you the charts individually now so that we can see how they've been performing. So here we go. This was Palladium, which technically has looked terrible. Quite a mess drawing wise, but you could see that this is classic toppy price behavior with very thin volumes. So it's a very thin market. So that does have to be taken into account in terms of trading, being able to get it. We do have a broker that will facilitate Palladium trading. You can check the links below. That is Scandinavian Capital Markets. But you do have to bear in mind that if you get something wrong, it's thin markets. It is a thin market. So that is the log scale. But just before I put it on the log scale, let's give you some history of Palladium. Palladium in 2009 at its lows, you could have had for $161. At its absolute high, 3,409. That is just unbelievable. This is crypto market-esque that you're seeing. And this skittishness that started after that blow-off is the beginning of a top that could see potentially quite a substantial size. One of the most profitable legs could in fact be your short on the Palladium, in spite of the rest of precious metals revaluing down. Remember, platinum has a jewelry use. Generally, people don't say, have a look at my Palladium Rolex or my Palladium earring or tooth, if you're Mick Jagger, etc. So it's not considered in that category from a jewelry point of view or as a natural bullion choice. So this technically is very toppy. There's a number of ways we carve it. But I mean, you can see there's been a kind of tech after this upside HVF, which we traded to the long side some time ago. There's kind of been a little bit of a key level just run in and around the 1700s that you've usually bounced off of. Now, we can't say that this is a classic technical head and shoulder. You could make an argument you have a complex head such as that. And as we like to see the weak right shoulder, we teach a lot of people about how to identify complex head and shoulders, and also how not to get naught or sub-zero targets that are meaningful and performed to via our HVF method. Go to themarketsniper.com, 3Ws, themarketsniper.com to find out more. So Palladium, for me, actually has a number of structures which are indeed rather bearish. And the more recent history where we were discussing it in the community was highlighting this structure where we expected it to break down. That the community got, you are now getting it post-event of a breakdown, but there is still potential for a lot more. However, you have to bear in mind, if you're a trader, that as you've had reasonable reactions in and around the 1600 level before, you could face a bounce. In my overall opinion though, you've had your number of bounces. I think there's a reasonable chance that you continue to capitulate. So Palladium is naturally weak. To me, technically, right now, in spite of it. I'm going to take you in a little further to show you the daily. You can see these structures are inherently bearish, grind line. That is an absolute textbook blow-off, by the way. when you get range of movement, that is a thin, I said sin, but it's probably sinful that it's so thin, a thin provided market where people just had to hold, and they chased up to ridiculous highs. But then they make long-term plans to pivot out of something where they can be ransomed by cost to such a level. And there isn't even an exchange. These are done normally by commodity broker to commodity broker. It's pretty tough for people to corner such a thinly provided market, and it is subject to violent price swings. And it's had the violent price swings to the upside. So that in itself was already a bit of a warning for us. We saw multiple grind lines being broken here. You have a bit of a channel, for example, in there. We like to split it, and we were highlighting this again where you got a classic channel. So that represented our break up top here. That was north of 1800. You're already down at 1653. This is like a crypto. That is $150 give or take that you've already dropped on an 1800 instrument. You're not far off getting to 10%. You're probably banging on the door of about 7.5%, 8% at that juncture, with likelihood to spill further in our view. So technically, this particular highly expensive industrial metal that is less likely to be used for jewelry or bullion is very strongly priced. It's priced like a precious metal. In fact, it's priced beyond a precious metal. Until recently, it was worth more than gold per ounce. Yet it isn't considered bullion, and it isn't considered worthy for jewelry either. Now we pivot to our friend platinum. That is at 996. Now I'm not going to tell you that right now technically this is the most beautiful, but it's done a lot better. We want to go from the monthly to the weekly, as we did for the palladium. You can see platinum itself has done the palladium pump of its own, hitting a very, very high price of well above 2,300. When gold was still at a much, much lower level. We were talking about the 2008 level prices of gold. This for us has represented a long bleed out falling wedge on the dollar base price that had a breakout and a return move. Some degree of complexity. There was a small bounce and then a rejection. So we've also had a period of immense dollar strength and then immense dollar weakness within it. There's other drivers in here, apart from just the platinum and its own direction. But this has been a pretty assertive month. That was a pretty assertive month, and that's a pretty assertive month. We are halfway through December, which will be a little bit of a mixed month, being a December period. And of course, there's some talk about, you know, the pivot and turn. But overall for me, this is certainly in a far lower in range, in my opinion, and technically more robust space than the palladium market currently represents. Technically, incidentally, this too was very much a falling wedge of its own. So let's let the eye come back in, and you can see the draws that we've done over the various times. Again, allow a little bit of tidying up here. There was a falling wedge structure. There were many wedge structures. We were doing a lot of work on platinum here, as you can see, and following it on it. I don't tend to retain for too long the squeezes that are of a wedge nature. They just look messy when you go out to the bigger times of the charts, but we do definitely retain the key levels of significance, the horizontal ones. So with that slightly tidied up, it felt again that we were getting in this return move to the original macro wedge. Let's just log scale that you were squeezing back down again. This should probably be done on a weekly chart. There we go. Squeezing into this original return move again. Now, I'm not super excited about this structure over here as a rule. We'll look at it at a smaller time frame, but the overall move so far from the return to the big wedge is broadly been bullish. There has been some resistance that's running in here, so we'll have a small look at that when we drop down. But you can see that platinum broadly is in a better space than palladium overall. And it's only just beginning the move, if you recall, from the relative strength charts, where it is starting to break out of a range highs against palladium. Let's have a look at this, because there does seem to be something going in there. It could be bullish or bearish, it depends. Take it to maybe the 12-hour, tidying it up. There was quite a substantial move here that was rebutted, and you seem to be a little bit broadening, a little bit soft now, a little slip through the grind line over there. I wouldn't say particularly its finest hour, but it could be picked up, but I don't see it spilling at the rate of palladium. And in the long run, actually, we could see this girding its loins and potentially getting better and stronger for the long haul. At the moment, however, we can compare it also against the gold chart, and we can see how it's doing relative to gold, and we can also have a comparison on silver. Silver, not really related as a comparable in any way. Obviously at a massively different price point and a higher beta version to gold, but nonetheless many people's investment of choice, given the COMEX also running pretty low on silver responses. So we'll do both. Okay, let's get on with it. So should you buy platinum, gold, or silver? And this is the answer we hope to give you. It's actually, I'm going to do the gold COMEX futures. We make sure we just get enough history there. So you can see there has been a little bit of loss of momentum from platinum in this particular month. But where does it stand long term? Well, it stands at probably an all-time, not far off all-time lows, certainly, against gold. So again, if we were to carve this one up, technically, again, we start at the macro. Remember, we're macro technical. You don't get to call the big moves and the big calls if you're not looking at big time frame charts and you're not doing a lot of relative price performance. For me, overall, this actually was your wedge, and that was a final capitulation. So typically we splitters and we stick them on. There's a real reason. You can find out how and why and what we often observe through them on splitters by going to themarketsniper.com and booking a call if you want to learn a skill of a lifetime. But anyway, this was the last time platinum was significant. You had 2 1/3 ounces for 1 ounce of platinum, of gold. So this is gold. You needed 2 1/3. That is now dropped. The third is gone, the other one is gone, and the other one is gone, and you're left with just a half, barely over a half. So the thumb is a 1/2 ounce of gold. So you've gone from 2 1/3 to a 1/2 ounce for that single platinum ounce, for something that is 30 times rarer than gold and does have quite unique properties of its own. So there was a bit of a double top that you would have potentially called, and that would have performed, it would have sold off. We can do draws for that. I tend to go into the detail with community. This is for the overall view. You often get what we refer to as a type 2 falling or rising wedges, where you get a final capitulation or a last gasp pop out the top on a rising wedge. This was what I would categorize as that final capitulation. Same period, March 2020, that coincided with everything. So platinum was a big part of that. Just got knocked out of there. There was no industrial work for it. It was already out of favor, and then there was no industrial desire for it. This is classic of a return move, and we assess that in time. This is a break back up and resumption. You will take out that high in relative performance from platinum. In the worst case, you might consolidate in a channel range here with highs and lows, which will make it would still make purchases at around about a 1/2 a gold ounce to a platinum ounce as pretty good value, in my opinion. So you could still get 50% on that by running up to the 0.75 level, even if you never broke it and went beyond. So that is very typical of a falling wedge that does a final capitulation before popping out the top on the upside. So for me, whilst a bad month right now, the single candle, that's very small. It's actually helpful for entries, by the way. A minor glitch in something that is showing 3 strong months after bouncing off this level range. If you want to wait for greater certainty, listen, this doesn't mean gold's the bad trade. You're talking to someone who is a gold bull, and this is a stern benchmark in these times of hyperstagflation that are coming our way. However, the paper price of gold will go down in the risk all mega event-based risk that I'm almost certain will hit us. And the question will become, well, a thinner supplied metal may not be able to go that far, because there will still be some rudimentary use required for it, particularly now that palladium, in our view, is largely going to be less desirable and is considered, whatever manufacturing processes we may be using it are no longer aiming to utilize that. Okay, so that's moderately bullish, I would say, from a very deep low. I would love to have further history to share with you. I'm a little bit restricted by charts here. I'd love to be able to show you that these values, relative valuations, have typically seen platinum be anything from 10, 20, and even 30% more valuable than gold for many, many, many decades. But this is the history we have from 98. Okay, good stuff. Let's say goodbye to that. Let's drop down the time frames a tiny bit and have a look at it on a weekly. I wouldn't say there's massive changes there. There's your final capitulation low. It's very, very typical. And this is a little bit up, a little bit down. Small give back. And again, I wouldn't overinterpret that. I wouldn't overinterpret that at all. Small give back, yep, a little pop out the bottom, but I wouldn't make too much of it. So actually, it's an opportunity. You could look on even lower time frames to see if you get some small time frame reversal, if you're that way inclined. You did have a little bit of a bear flag, for example, over here. It's a little bit structural. And then you failed to make the other side of the channel. Let me just rub those other fellas out, which showed some degree of exhaustion across that, and then off and off you went, and you spilled. So there were obvious signs that you were going to get a little bit of sell-off, and you may have a rising wedge in process as well here, so it could go again down a little more. But this again is looking at this particular chart very much in the light of the mindset that it is needing to, yep. So the long and shorts of that are broadly that it's got a little bit of minor down leg, down price action, and you could try attempt to pick something that represents an inverted head and shoulders, a W bottom, something technical for when you leg that leg in. You could also await a rally before legging in the other leg, that is the palladium short. So refinement on actual entry points. Entries matter. Please hear me. Entries matter. Can be done. The concept is there. So let's have a look at platinum versus silver, which we also threatened you with. So we go SI here. I'll take it back up to the monthly as well to illustrate that. Silver's been a good performer. You've got to be aware that there's a COMEX shortage, but you could actually have a situation where platinum, due to it's lesser demand than silver, but its inventories being super short, it could be the one that first has a run out of supply, depending on the degree that it's being demanded. Let's just check this. I like on the longer term to ensure I'm on logarithmic scale before doing the draw. And again, unfortunately, just to 98, I would have loved to have had a 60, 70 year history here. This to me is very much what we refer to as the capping descending grind line, and you've got some degree of support I'd go through there. That would have been a wick, a bit of a spill and a wick and a dive back. So again, I would falling wedge along the lines here. You have had some rallies during this period, and of course silver has had spells where it's battled, but broadly this has been more about the silver winning out. The silver hasn't gone to $50 as it did in the post era of the subprime crisis, but it has done better than platinum so far. You could argue again that there's a little bit of an uncomfortable squeeze and that you're selling off. So right now silver's been pretty strong, and platinum is actually off for this week stroke beginning of this month. So it's having a rest. It's that industrial use, I'd imagine that is probably slipping, and it could slip more in the event of demand destroyed production. However, given that you would have the other side of that in palladium, that effect will be netted off potentially by a very expensive metal that's no longer being demanded at all, where there might be substitution taking place, and you then get the demand killing the industrial use. On a very thin market, palladium could fall exceedingly far. So yeah, that's how we got it. That's where we got it at the moment. But this is, again, change color, very much in our typical 3 impulses, for which you've already completed your second. And I would imagine you've got, this could take a while though. Remember, we're on a monthly chart. See that? Monthly. But you're on your 3rd impulse inside a falling wedge. We typically expect to see 3 impulses in a falling wedge. In other words, it's the sister of, it is the slightly mutated sister of the HVF. So that could, in effect, go as far down as visit the basing descending grind line there. But often they don't. They start locking up there, or they only go to the halfway mark and then they come up and go. So this might be a touch early for overperformance to silver, but this overall blue structure that I've drawn points to that fact. And actually you get an ounce of platinum for 42 ounces of silver, and that did drop as low as 33 at one point, sub the 33 mark. I could see all kinds of possibilities. I don't want to get too ahead of myself. Time needs to be on your side. I don't think this rips in one great moment, and as I've already highlighted, I think there will be pullbacks along the way, but you could get back above 100 ounces at some point of silver required for platinum, and that could be the silent winner in a situation where many people are very positive silver. You could actually get relative outperformance on silver. Not right this second. I think there is something afoot. You might rally and make a 3rd one here and come here. That could lead to either having a fractal that breaks down or a breakout. So it could come soon or cycle back and put you on the long road around to that side. Okay, so that's what you've heard from me today. Why platinum is a great net delta neutral trade against palladium. Remember, if you just buy the platinum and we have a demand destroying event, your paper price can go down immensely, in fact. But longer run, I remain a platinum bull. It's been a frustrating, lengthy period. We're looking on big time frame charts, and in silver, I still think there's some more action to take part for that to occur. But platinum could be a real buyer. And by the way, pure gold, the link below has actually sold it for me as well. So I've taken order from them. You can purchase 2 on the link there, and of course you can put these trades on if you know how to trade. If you're not too sure, HVF method is your friend. You can find out how. Hit the link over there. Remember, we aim to eliminate the rationality bypass words like belief and many other things, and we look at real charts. It's got to be ready, it's got to look right, it's got to look the footsteps in the sand that you are witnessing here in the charts have got to show that it's ready. I think it looks ready against palladium. I think it's getting there against gold. It's got a reasonable weight still to happen against silver, but that could be an environment where silver is already also performing exceedingly well. If you already have silver and gold, this could be a very good extra arrow to your quiver set. Until next time, the Market Sniper says goodbye. Catch you again. Thanks for watching.